welcome to my YouTube channel at Illumination of NG. So don't forget to subscribe to the YouTube channel and also click on the notification bell so that you can be notified whenever I drop a new video. So today we're going to look at issue of shares involving issuing of shares at premium. Okay, and here we have a question here in regards to a company that owns 200,000 ordinary shares of 1 naira each at a premium of 120 kobo per share. Payable as follows. We have on application, the applicants pay 0.25 kobo per share on application, and on allotment, the allotment was issued at a premium of 20 kobo. The total allotment value was 0.40 kobo per share. On first call, 0.35 kobo was paid, and on second call, 0.20 kobo was also paid. Please don't forget to subscribe to my YouTube channel and also click on the notification bell so that you can be notified whenever I drop any video. So let us move on with the question that we have here. So we're going to start with the notes to the account, and let us see what we can achieve with this. And also we're going to prepare what we call a balance sheet extract or statement of financial position extract. So let us go ahead and start with the notes. So we have note 1 on application. So how much did you pay on that? We paid for 200,000 units of shares, multiplied by 0.25 kobo. So that will give us 50,000 naira on application. Number 2, on allotment. It was issued, the ordinary share capital issued, that should be 200,000 units multiplied by, so that will be, the premium here is 20 kobo. So the ordinary share capital value is 20 kobo. That is 40,000 naira. So that naira sign here. Then the share premium, that will be 200,000 multiplied by 0.20 kobo. That is 40,000. So at the end of the day, we now have a total of 80,000 on allotment. Okay. So the third one we have on first call, which is 200,000 units multiplied by 0.35 kobo. That will give us 70,000 on first call. So number 4 on second call, we have, so on the second call we have we have 20 kobo, that's 100,000 multiplied by 0.20 kobo. So let me put the naira sign here. Okay, so that will be 40,000 there. So initially, the value of this share, the total value, let me just that here, should be 200,000 units multiplied by 1 naira 20 kobo. So at the end of the day, you should have 240,000 naira in total received into the bank. Okay, this will go into the bank. Okay, so let's add this together. We have 50,000 plus 80 will give us 130, plus 70 will give us 200, and plus 40,000 will give us 240,000, which is right. So this means that at the end of the day, we've been able to get the workings, and now the next thing is for us to now post into the various ledger accounts. So let us now go and post in the ledger accounts. Let's post into the ledger accounts. So let's start here with application. On application, so application first, we start with the application account. So we have debits and we have credit. Okay, so in application we have ordinary share capital account, okay, and we also have bank account. Okay, so the bank account, how much is going there? 50,000 naira is going there into the bank account. So following the double entry principle, Okay, we credit the application account with 50,000, and we go ahead and what? And let's open the bank account. Bank account. Okay, we have debit, we have credit. Okay, let's put the naira sign. The naira sign. So bank account, we have application on application on application. So since we are receiving money to the bank account, we have 50,000 naira debited. So for every debit entry, there must be a corresponding credit entry. Okay, so and on the share capital account, we have 50,000 naira debited here. 50,000. So with this, we've been able to comply with the double entry principle by doing this. So let us go down now to allotment. Allotment. So let's prepare let's do that by the side. So let's do that by the side here so that we can have the bank account. So let's go ahead. On allotment, we have allotment account. We're still going to open account. We're still going to open the share premium account and the ordinary share capital account. On allotment, we have debit, we have credit. Okay, the naira sign, we have the naira sign. So we have the ordinary share capital account, capital account. Also have the share premium. So in this case, we're going to have three accounts: share premium account. We also have the bank account. So see that here we have the account. So we have 80,000 going to the bank. 80,000 is going to the bank. 80,000. 80,000. So for ordinary share capital, 40,000 is going into the ordinary share capital account. 40,000. And 40,000 is also going into the share premium account, as you can see here. So we have a total of 80,000. We have a total of 80,000. So by doing this, we've solved this account and we prepare the account, okay, on allotment account. The next thing is to go on the first call and the second call. Then we transfer to the various ordinary share capital account, okay. So let us move on first call. So for first call, so let's post this bank account now on allotment. Allotment, we have debit 80,000, so which is inclusive of the share premium, okay. So we also have okay, let's move on. We have the first call account. First call account. We have the debit, we have the credit, okay. We have the naira sign, So we have the ordinary share capital. We also have the bank account. So we have the bank account, so we have the ordinary share capital. So bank account, we're going to credit that in the first call account and debit the ordinary share capital account. Okay, so okay. So here we have prepared the first call account. So let's go to the bank account, first call. Okay, first call we have 70,000 in the bank, going to the bank account. So the next one is to prepare the second call, which is 40,000 naira from what we have calculated. So we have the second call account. So the second call account, we have that. So we have debit, we have credit. So we have the ordinary share capital account. We have the bank account. So bank account, we have already 40,000. Let me drag that up a bit. We have the 40,000 there. Then we have 40,000 there going to the what? To the ordinary share account. So we've done this, completed this. Let's not go to this. Let's post this to the second call account. Second call. Okay. We have 40,000. Okay. So let's now open our ordinary share capital account. Okay. We have debits, we have credit, okay. So we have application. So on application, we have what's the value that should be 50,000 from when we completed here, 50,000. Going to the ordinary share capital account, credits 50,000. Okay. On allotment, we have how much going to allotment. Let's check that the allotment account. We are picking this 40,000 naira going to the ordinary share capital because the share premium account will take 40,000. So let's go ahead and do that. So allotment, we have 40,000. 40,000. Okay. On first call we have when we come to we have 70,000, and on second call we have 40,000. Okay, thousand. Okay, so our share premium account, premium account. Okay, our share premium account. Let me back that. I do that very well. We have debits. We have credit. Okay. So our share premium account, we have we have so let's see what we have here. So where do we post that? We have that on allotment. Let's check. So share premium account we have 40,000. Ordinary share capital account we have okay. So we have share premium account we have 40,000. So we have on allotment, okay. Allotment. Under allotment we debited, so we're going to forget the double entry principle. We call it 40,000, okay. 1,000 there. So that's what we have there. So with this we have our account. Okay, so let's balance this. So on the ordinary share capital balance carried down, is what it is. So sorry, 200,000. So the initial value of the ordinary share capital is 200,000. 100,000. Okay, so let's have this 200,000. Okay, okay. So the on share premium, our balance carried down for share premium is 40,000. 40,000. 40,000. Okay, 40,000. So this is gross. This is the share premium on the account. This is share premium. Okay, this is what made this to become 240,000. Okay, okay, this will make it to be 240,000 because of the share premium, the premium on it. So let's go ahead and check. Okay, what's the next one that we need to balance? Okay, so we have on our bank account. Let's balance the bank account. So we have balance carried down. Balance carried down. We have when we add this together, we have 240,000. Okay, and balance carried down, we have 240,000 here. We have 240,000. So on this note, this is how to prepare the various accounts. Okay, so let us now prepare the balance sheet extract. Okay, or what we call the income statement of financial position. So let's just call it balance sheet. Balance sheet extract. Okay, so we have our assets. Oh, actually, let me draw this line very well. So we have our asset side. We have our liabilities. So we are financed by. We have our capital account, ordinary share capital. What's the value of the ordinary share capital? That's 200,000. Okay. We have our share premium. Premium, that's 40,000. Okay. So we put the naira sign there. On assets, we have bank, which is the current asset. This is the current asset. Okay. So we don't have any fixed asset bank because this is what we call an extract. So we don't have full information in regards to the asset of the company. So we have to 40,000. As you can see in the bank accounts here, Yeah, that we have here. Okay, so 240,000. So at the end of the day, we have 240,000. Okay, so let me just move this a bit. So we have, let me just Naira sign. So we have it here 240,000. Okay, and we have the total here 240,000. 40,000. Okay. So since it's an extract, let me just take this off. We call it an extract, so we're not balancing the account yet. So for any extract, what we're saying is that it's just an extraction, okay, of financial information from the various, various ledger accounts that we have. So since we have no balance, we don't have any other information to really add up to this balance sheet or statement of financial position. We don't need to balance or draw the double line. So let's just leave it that this is what we have here. Until we begin to post other figures in the revenue of current assets, okay, we have liabilities, we have the current liabilities, okay. These we also have the non-current liabilities, current liabilities, okay. So we're not told in the question about all this one. We also have under assets, we still have non-current asset, okay. Current asset, okay. Please just take note of this. And for you to be able to draw the extract, this is how to draw the extract. This is just for illustration purpose. Try as much as possible to ensure that when you draw your diagram, you draw your tables very well. Okay, and you present it very clearly, okay, and do your workings very clearly. So this is how you're going to want to treat questions in regards to if you have shares on premium, okay. So thank you for your time for watching this video. Please kindly subscribe to the YouTube channel and share my videos with your friends and colleagues, and don't forget to subscribe to the YouTube channel and click on the notification bell so that you can be notified whenever I drop a new video. Okay, so thank you for your time, and I will post another video soon. So kindly watch out for the next video, which is also on how to prepare company accounts, the various final accounts for a company. Thank you very much, and God bless you. Have a nice day. Bye bye.